Hello and welcome. In this video, we will know who the big players of stock market are. Okay. In the previous video, we learnt who the small players were, correct? In this video, we will know about the big players. Now, what is this small players and what is this big players? Why do we call these as small players and why do we call these as big players? That is because these players have or create an impact on the price of the stock. Okay? These are small players. When we buy or sell shares, it doesn't impact the market price of these stocks. Whereas when these players buy or sell the shares, it has a great impact on the market price. If they sell or if they buy, the market price will go up and down. And that is why we call these as big players. Okay, so we'll see how they impact the market price. All right, now these are small players. We have covered this in previous video. Now let us learn about this. First, we have asset management companies. These are the companies which take money from people like you and me, pool it up, and then collectively invest in stocks, and they are called as mutual funds. Okay, next we have foreign institutional investors or FIIs. You might have heard in news that FIIs have removed money from the market or they have invested in the market. So we'll see what these are. Next, we have domestic institutional investors or DIIs. Now, these are from within the country. Next is high net worth individuals or individuals with a lot of money. Then we have banks and NBFCs. These are financial companies which are not banks, but they can give or lend out money. Okay, so we'll see each one by one. First is asset management companies or mutual fund companies. Now these are the top mutual fund companies from India. What do? They collect money from retail investors, people like you and me. They collect money and then they invest our money in the stock market. They invest our money in the stock market. So whenever the stock moves up, they get profit, and out of that profit, they give us some. They keep some of the profit. Of course, they are also working, and so they need to earn profit too. So some profit will be kept by them and rest will be given to us. Okay. So these are asset management companies or mutual fund companies. Next are foreign institutional investors. Now, I am from India, so any investor who is not from India but has invested in Indian stock market is a foreign institutional investor. Okay, if you are from America, if any investor from outside of America invests in the American stock market, then he becomes foreign institutional investor to you. For example, I am from India, you are from America. If I invest in your stock market, then I will be the foreign institutional investor. Okay. Now what are these? These are or these may be individual investors. individual investors, meaning investors with lot of money from outside the country, and mutual fund houses from outside the country. For example, American mutual fund companies may invest in Indian companies, may buy the stocks of Indian companies. Then hedge fund companies or hedge funds from outside the country may invest in Indian stock market. Infrastructure companies of outside may invest in Indian stock market because they see a growth in our country or wherever you are. Okay, they see a potential growth in other country, and so they invest in the stock market of or stocks of that particular country. Okay, so these are general foreign institutional investors. All right. Next, we have domestic institutional investors. Domestic meaning from within the country. I am from India, so the investors from India investing in the stock market becomes domestic institutional investors. Now, pension fund houses and insurance companies are main domestic institutional investors. Pensions. Some companies give out, have pension schemes. Government gives out pension, correct? So, the pension funds are invested in the stock market. Okay? They have people who analyze the stock market. They just do not put it in the stock market. That doesn't happen like that. All these have analysts who analyze which stock has potential to go up or where should the money be invested. So according to that plan, they will be investing. Okay. So pension fund houses, insurance companies will be investing in Indian stocks, and if they do that, they fall under the category of domestic institutional investors or DIIs. Okay. Next, banks. Okay, banks of any particular company. I'm from India, so Indian banks. Banks will be investing in the stocks of a country. Along with banks, we have non-banking financial companies or NBFCs. Now, these are not banks. Okay, you cannot deposit money in them, but these can lend out money or they can give loans. For example, I have listed out 4 companies here. There are many others too. Power Finance Corporation Limited, Shriram Transport Finance Company, Bajaj Finance, Muthoot Finance. All these are NBFCs, non-banking financial companies. You can borrow loan from them. But you cannot deposit money in them. Okay, this is the general rule. They are not categorized as banks. Now, these will also invest in stock markets. Alright. Finally, we have high net worth individuals. Now, these are individuals, people like you and me, but with huge amount of money. And by huge amount of money, I mean in crores. Crores and crores of money. Alright. Now, they too invest their money in stock of any company. Alright. Now, apart from this HNI, the intention of others, FIIs, DIIs, banks, NBFCs, mutual fund companies, is to create wealth. Okay, create wealth for those who have invested in them. Okay, those who have invested in them. For high net worth individuals, it is their personal wealth which must grow. And that is why they invest money in the stock market. Alright. Now, what are the features of big players? First is that they affect the market, or they affect the market price of the stock. For example, if the big players decide to invest in the stock of a company, then the demand for that stock goes up, and so the market price also goes up. Okay, but if for any reason the big players want to remove money from the company, meaning they want to sell the stocks that they had bought, then there will be more supply, and so the market price comes down. This is what we call as stocks are falling, stocks are rising in our local terms. Basically, when they remove money, they remove in crores, okay, hundreds of crores, or if you are from other country, hundreds of millions of dollars will be removed from the stock market. And when that much amount of money is removed from the market suddenly, the market comes down. When I say the market comes down, it means the stock price of the company that they had invested in comes down. Okay? So when they buy, the price goes up. When they sell, the price goes down. Okay? Now, I had taught you about different sectors, correct? We have pharmaceutical companies, we have automotive companies, we have insurance companies, we have banking sectors, so on. Now, what happens is sometimes FIIs, if they find the sector is not performing properly, or not only FII, others, okay, if the big players find that some particular segment in which they had invested in is not working properly, they will remove the money from that particular sector and invest in other. For example, assume that the big players have had invested in stocks of automotive companies. Okay, big players have brought the stocks of automotive companies. All right. Now they, according to their analysis, they decide that the particular sector is not performing well, automotive sector, and according to their analysis, the pharmaceutical company is having growth in the future according to their analysis. So what they do is they remove the money from automotive sector and they put it in pharmaceutical sector. So what happens is the automotive sector comes down, the stocks of automotive companies comes down, whereas the stocks of pharmaceutical company goes up. Okay, and this happens simultaneously. So one will be falling, one will be rising. All right. So there are many things that can happen, but we call them big players because they affect the market price. Okay. Next, they are interested in bonus shares, dividends, rights issues, and voting rights. We have learnt about all these, correct? So these big players are interested in all of these. By getting this, they earn money, correct? They create wealth, and so they are interested in it. Next is, we had learnt about hedging and arbitrating, correct? These are what the small players do. But the big players also do this to protect their portfolio, to protect their money. They do this only when it is required. Okay? They do this only when it is required. If it is not required, they don't do that. Okay? But these two things are the main features which make them big players. Alright? Yes. So that is about big players. And in the next video, we will learn about the hidden players who affect the market price. Okay. So I'll see you in the next video. Till then, take care and thank you for watching.